So in today's video, I want to go through tweezer tops. This is a candlestick pattern, and I'm basically just going to go over how to use it and why people use it, and basically what the candlestick pattern in and of itself is. So basically, candlesticks is basically the language of the market, right? So how do the markets move? They move within the candlesticks. So if you can understand basically the candlesticks and how the candlesticks work, then you will definitely be a more profitable trader. And you have to understand like the psychology behind it as well. I think that's very key. So without further ado, let's get it. Let's go. For starters, what is the tweezer tops candlestick / tweezer bottoms candlestick? So a tweezer top candlestick is a bearish reversal pattern that occurs when two candlesticks have similar or identical highs. It is a sign that the market sentiment may be shifting from bullish to bearish. Okay, so basically, this is how it looks when it's going towards the top, and this is how it looks when it's going towards the bottom. I want to make this photo bigger for you guys. Perfect. All right, so here. So this is how it looks at the top of it. So when the market wants to come down, and this is how it looks at the bottom when the market wants to go up / in the opposite direction. The candlesticks are one of those things where it's very, very profitable because you're no longer trading with indicators, XYZ. Instead of trading with the indicators, you're trading with support and resistance. You're trading with high areas of demand and supply. And then you're also trading with your eyes, right? So what can you see on the charts as opposed to what do the indicators see? I think that's very key. Let's go to SPX. And I'm basically going to show you guys an example of where I've seen this happen in the market. This one right here would have been perfect if you were looking for bullish momentum based on these two candlesticks and based on the doji candlestick that happened prior. You could obviously tell that sellers were no longer in control. And these two tweezer tops right here, you have a bullish one, you have a bearish one, and this would have been your pullback to get into the trade. As soon as it closed up here, I would have gotten into the trade right here and taken it towards the upside. Just based on simple market structure, we did have the push here, and then we had a pullback towards the resistance. And then we have a retest of this one candle here, doji candle, and we have tweezer tops here as well. So that would have been your confirmation to take that trade. Versus tweezer bottoms, as you can see, they formed here, and then the next candle did end up pushing back towards the downside. So I would have entered this position for a sell. It's 11:25 a.m. at this point on a Thursday. So you could have entered a short position right here when it closed back into your zone. Honestly, if it didn't close in the zone, though, I personally wouldn't have entered this position here. 5 points to gain 15 points. And this would have been my setup for that trade. And then it also happened right here again, as you can see, at 125. So you really just have to train your eye to see it. Doji candle there, and there's a doji candle here. So this doji candle would have told you that buyers aren't really in momentum, and sellers might want to step in. There's a higher chance of sellers stepping into this particular trade. And you could have took the trade right off of the resistance as well, and then just taking that trade down. I'm going to show you guys the exact same thing that had happened on NAS 100 as well, so you can get a better understanding of it. Obviously, with NAS, it is a bit different. So for NAS, personally, I like to risk 25 points, 250 pips to gain 750 pips. So as you can see, for this particular trade, it would have played out for you, or say you were like, I don't like that. It's a bit risky. What you could have done was waited for the retest. So waited for it to come back to your potential area of interest / zone, and then taken the trade down. And say you wanted to enter right here. Then your stop loss would be if it comes back up to the zone, then it takes me out of the trade, right? And then this trade happened at 125. So the exact same example, just on a different pair. And NAS usually likes to move the same way as SPX does. I just find that NAS sometimes won't really slip you out of the trade. That's just my humble opinion, though. But let's look for a tweezer bottom. I'm just going to try to find the one from this morning. The one from this morning was really, really clutch. Like, if you didn't see it, I don't know what to tell you. But basically, as you can see right here, these two candlesticks are basically identical in form. in shape. As you can see, right here would have been your tweezer tops. And then once again, this would have been a bit of a frustrating entry just based on how price was wicking here. So I wouldn't really have liked this setup, but it's just to show you that it usually works. And then say you wanted to do it on the higher time frame. I believe that was there on the higher time frame as well, but I would have waited for price to solidify above here and really give me proof that it was wanted to go up, right? Like obviously we do have the tweezer tops, but you can't just use the tweezer tops only as your entry. I feel like you need stuff with it as well. Like, yeah, the candlesticks work, but you have to make sure that it's in order with your zones, right? Like as you can see, there's a zone here for buys / bullish pressure up. There's a zone here for bullish pressure up. So I personally don't think it makes sense to trade in between these zones here and here. So I would have waited for the market to come up here, and then I would have potentially entered the trade right here, and then taken this to the upside from there. I risk my 25 points. I'm out within 75 points. And then last but not least, I'm just going to show you guys what it looks like on gold. And then you can do what you will with this information. But it's crazy because gold did the exact same thing. I did not come here to look at this before. I promise you, I basically haven't looked at gold all week, but we do have tweezer bottoms here that formed on gold as well. So this is just solely based on price action, right? One thing that I recommend people become is a price action trader because I can see what's going to happen next, or I can see what can potentially happen next, right? So you have your tweezer bottoms here, obviously within a resistance zone as well, but let's just see if that actually riddles true. Like, let's see how the 4 hour is performing, and let's see if there was like a common zone in this 4 hour. Because I don't just want to talk just to talk. I want to actually prove a point, not to be cocky or anything. But basically, you can see we whipped into this area, right? So there is support there, even on the 4 hour. And I always say the higher the time frame, the stronger the structure. So you can see we whipped into it. We wicked into it here as well, and we pushed up off of it after it was once resistance. So I think that would have been a pretty solid zone for you to get into a buy here off of the tweezer tops as well, because you have tweezer tops at a support zone. So let's go back to the 15-minute candle time frame where we've seen it. So as you can see, 15-minute time frame here, and then from there for gold, right? I would risk 5 points to gain 15 points. Normally, I don't trade this pair, as I said, but just so that you guys can have more of a perspective, my entry for this trade would have been right here. And then we're going to go down here. I just have these saved. It makes my life a lot easier. Gold. Click OK. And then we're just going to change the color because I can't see it. Okay, so there you go. So my stop loss would have been about here, and my take profit would have been right here. And it would have played out perfectly. And after it played out, it also gave you a retest right here of the exact same area. And then it pushed up. So that would have been your smooth sailing entry. And then let's look for a tweezer top as opposed to a tweezer bottom on gold. And then that'll be it for this video. Because I can talk about trading forever. I love trading. You guys see the tweezer top right here? Yeah, get into it. So there is one right here at the top of this zone. I was trying to find one for the longest time now. Right here in this area at 3:45 p.m. Not saying y'all should be trading at that time. I'm just saying there is one right here at 3:45, right? You have the tweezer tops. And then say you wanted to take this particular position, right? You could have took a short right after it closed. So right about here. And then your stop loss would have been 50 points to gain 150 points. Or 400 points if you wanted to gain 100 and to gain 1,200 points, right? So let's change that up a little bit. So there you go. And then the trade would have came back to test this area, and then it was smooth sailing from there. So this is definitely a strategy that you should get into using. Just basically understanding how the candlesticks work and why they work the way they do. So the psychology behind how they're printed. So that was going to be it for this video. I hope you guys enjoyed it. I hope you learned something from it. I know I did. I always love teaching and basically educating people. So that's what I aim to do more of on my YouTube channel. So definitely stay tuned and let me know what other videos you want to see from me. And without further ado, I'm going to end the video off here. Let me know what you'd like to see in the future. And if you're a real one, subscribe and like this video, and definitely share it if you found it helpful, because I know it could help a lot of other people as well. And I will see you guys in the next one. Thank you so much for watching. Peace.